Hello everyone, welcome to Crypto Mobile Mining and Trading. I am Dixon and let me give you a quick real-time update after my tireless research to give you the finest. Today we are taking a deep dive into the incredible history of Bitcoin from its mysterious beginnings to its current status as a global phenomenon. It's a wild ride, so make sure you're subscribed, you've liked this video, and you've smashed that notification bell so you don't miss any of our updates. Let's get into it. It all started back in 2008. An anonymous person or group known as Satoshi Nakamoto published a white paper titled Bitcoin, a peer-to-peer electronic cash system. This wasn't just another idea, it was a blueprint for a decentralized digital currency, a way to transact without needing a bank or any central authority. Think about that for a second. A system based on trust in cryptography, not in institutions. It was revolutionary. On January 3, 2009, the Bitcoin network came to life. Satoshi Nakamoto mined the very first block, known as the Genesis block. This block contained a hidden message, a headline from the Times newspaper, "Chancellor on brink of second bailout for banks." This wasn't just a random quote. It was a powerful statement about the flaws of the traditional financial system that Bitcoin was designed to challenge. A few days later, the first ever Bitcoin transaction took place between Satoshi and a programmer named Halving. The journey had begun. In those early days, Bitcoin had virtually no monetary value. It was a project for cryptographers and tech enthusiasts, a digital curiosity. The price? Well, there wasn't one. It was mined for fun. The first time Bitcoin was assigned a real-world value was in 2010. One of the most legendary stories in crypto history is about a programmer named Laszlo Hanyecz, who famously paid 10,000 bitcoins for 2 pizzas. At the time, that was about $41. Today, those 10,000 bitcoins would be worth hundreds of millions of dollars. Imagine that. This event, now celebrated as Bitcoin Pizza Day every May 22nd, was the first proof that Bitcoin could be used as a medium of exchange. The year 2011 was a major turning point. Bitcoin's price reached parity with the US dollar for the first time, 1 Bitcoin for $1. This milestone attracted a wave of new interest and media attention. As more people learned about it, exchanges like Mt. Gox emerged, making it easier for the general public to buy and sell Bitcoin. With this increased accessibility, however, came increased volatility. The price surged to over $30 before crashing back down to single digits, giving the world its first taste of Bitcoin's now famous price swings. This was also the year when the total supply of Bitcoin surpassed 5.25 million, a quarter of its total possible supply of 21 million. Let's pause here for a moment. This is a lot of information, and I want to make sure you're all following along. If you have any questions or thoughts so far, drop them in the comments below. I read every single one. And if you're finding this history lesson valuable, do me a huge favor and smash that like button and make sure you are subscribed. It really helps the channel grow and allows me to keep bringing you this content. Alright, back to the timeline. By 2013, Bitcoin was really starting to make headlines. The price exploded, rocketing from around $13 at the start of the year to over $1,000 by November. This incredible rally was fueled by a combination of media hype, growing adoption in countries like China, and a general sense of excitement about this new digital gold. The market cap, which is the total value of all bitcoins in circulation, surpassed $1 billion for the first time. It was a clear signal that Bitcoin was becoming a serious asset class, but with great highs come great lows. The collapse of the Mt. Gox exchange in early 2014, which at one point handled over 70% of all Bitcoin transactions, sent shockwaves through the community and caused the price to plummet, kicking off a long bear market. The period from 2014 to 2016 was a time of rebuilding and maturation. While the price was down, development on the Bitcoin network and the broader crypto ecosystem was stronger than ever. Companies started building infrastructure, venture capitalists started investing serious money, and the concept of blockchain technology, the underlying engine of Bitcoin, began to capture the imagination of major corporations and governments. This period was crucial for laying the groundwork for the next massive bull run. It proved that Bitcoin was more than just its price. It was a resilient technology with a dedicated community. Then came 2017. If you were around in the crypto space then, you'll never forget it. It was the year Bitcoin went mainstream. The price started the year under $1,000 and, in a spectacular parabolic run, surged to nearly $20,000 by December. Everyone was talking about it, from your Uber driver to your grandmother. The market cap soared to over $300 billion. This bull run was different. It brought in a massive wave of retail investors and put Bitcoin on the map for major financial institutions. It also sparked the initial coin offering, or ICO craze, where thousands of new crypto projects launched, raising billions of dollars. Of course, what goes up must come down. The 2017 peak was followed by the crypto winter of 2018, another prolonged bear market where the price fell by over 80%. Many newcomers lost money and declared Bitcoin dead once again. But for the long-term believers, this was just another cycle. Development continued, and institutional players like Fidelity and Intercontinental Exchange, the owner of the NYSE, began building out institutional-grade custody and trading products. They saw the long-term potential even when the market was down. Fast forward to 2020 and 2021. The landscape changed dramatically. The global pandemic and unprecedented money printing by central banks worldwide led many investors to look for a hedge against inflation. Bitcoin, with its fixed supply of 21 million, became an attractive option. We saw major publicly traded companies like MicroStrategy and Tesla add Bitcoin to their balance sheets. Payment giants like PayPal and Square integrated crypto, allowing millions of users to buy and sell it easily. This wave of institutional adoption propelled Bitcoin to a new all-time high of over $68,000 in November 2021, with its market cap briefly touching an astounding $1.3 trillion. It was no longer a niche asset, it was a legitimate part of the global financial system. And that brings us to today. The price has seen its ups and downs since that peak, navigating new regulations, market cycles, and global economic shifts. But the fundamentals remain strong, the network is more secure than ever, adoption continues to grow, and major innovations like the Lightning Network are making Bitcoin faster and cheaper to use for everyday payments. The market cap continues to hover in the hundreds of billions, solidifying its place as the undisputed king of cryptocurrencies. From 2 pizzas to a trillion-dollar asset, Bitcoin's journey has been nothing short of extraordinary. It's a testament to the power of a decentralized idea. I hope this deep dive into Bitcoin's history has been insightful for you. Understanding where it came from is key to understanding where it might be going. What part of Bitcoin's history do you find most fascinating? Let me know in the comments. I'd love to hear your thoughts and answer any questions you might have. Thank you so much for watching. If you enjoyed this video and want more content like it, please hit that like button, subscribe to the channel, and turn on all notifications by smashing that bell. Your support means the world. My name is Dixon, and I'll catch you in the next video.